Good morning, dear student. I am Kunal Kiran from the Millennium School, Lucknow. Student, we have been learning accounting treatment at the time of admission of a new partner. We have already discussed goodwill treatment, reserves and surplus, and today I am going to discuss about revaluation of assets and liabilities at the time of admission. So, why it is required that at the time of admission or at the time of reconstitution, partners have to make revaluation of assets and liabilities, because assets and liabilities are changing in its value with the passes of time. So it is necessary at the time of admission of a partner to revalue the assets and liabilities of the firm to their true and fair value. Otherwise, what happened? New partner may suffer due to reduction of the value of asset, or he would get benefit if there is an increase in value of assets or decrease in value of liability. So it is also to understand if there is increase in asset, decrease in liability, or if you are recognized at the time of admission, you are recognizing some unrecorded asset, they all are gain for the business. And in the same way, if there is decrease in asset, increase in liability, or you are recognizing any unrecorded liability, that are loss for the business. So it is necessary that at the time of admission or reconstitution, partners have to calculate profit or loss due to revaluation of assets and liabilities, and that profit or loss should be shared by the old partners in their old ratio. No profit or loss to be borne by new partner, because he is not liable, he is just new. So the accounting treatment is to calculate profit or loss on revaluation of assets and liabilities by opening revaluation account or profit and loss adjustment account. We also say profit and loss adjustment account to the revaluation account. So profit or loss on revaluation of assets and liabilities will be distributed or shared by the old partners in their old ratio. So these are the treatment. We are if there is any increase or decrease in assets and liabilities, so we should calculate revaluation profit or loss at the time of admission or at the time of reconstitution of partnership, and after calculating that profit or loss, we will open a new account, that is revaluation account or profit and loss adjustment account. Both are correct. Generally we use revaluation account, but sometime question asks you to prepare profit and loss adjustment account. So profit and loss adjustment account is same as revaluation account. This is the same terminology used for revaluation. So revaluation or profit and loss adjustment account, the nature of these accounts are nominal account, you can say, or expenses or revenue account, you can say, as per the modern rule. So modern conventional or modern rule will be applied. If you are considering it nominal account, then all expenses or losses should be debited, all income or gains should be credited. If you are taking modern rules, so for modern for expenses and losses, modern rule says if increase in expenses and losses should be debited, decrease in expenses and losses should be credited. For revenue and gain, if it is decreasing, it should be debited. If it is increasing, it should be credited. So for the journal entry at the time of admission, if there is any increase or decrease in the value of assets and liabilities, so first journal entry, if there is an increase in asset should be debited. increase in asset Increase in asset should be debited, and this is if an asset is increasing, it is a profit for the business, so revaluation account or profit and loss adjustment account will be created. The same way, if liability is decreasing, it is a gain for the business. If liability is decreasing, then decrease in liability should be debited as per the modern rule, and revaluation account gain should be credited in the to revaluation account. If unrecorded liability, this is wrong, unrecorded asset, so unrecorded asset is there, then it should be debited here, and this is a gain for the business, so revaluation account will be credited. So journal entry will for increase in asset, decrease in liability, or unrecorded asset, the journal entry will be increase in asset slash decrease in liability slash unrecorded liability account debited to revaluation account. I have shown it in a combined way for your quick revision, right? Although it can be passed individually. The same way, if there is a decrease in asset, increase in liability, and there is an unrecorded liability, it's a loss for the business, so for the loss, revaluation account will be debited, and decrease in asset should be credited, increase in liability should be credited. If there is unrecorded liability, then definitely it should be credited. So at the time of revaluation, if there is any expenses on revaluation, so it's expenses revaluation account debit to cash or bank, or if any partner paid it, then partner's capital account will be credited. Second case for the remuneration expenses of revaluation is when remuneration is paid to a partner for revaluation. For that amount which we are paying, allowing as a remuneration to the partner, is a loss for the business or expenses for the business. So revaluation account debited to partners, concerned partners capital account. Third case, if revaluation expenses are liability of a partner but firm has paid expenses. In that case, partner has to pay, but if partner is not paying and on behalf of partner, firm is making payment, then that partner's capital should be decreased by that amount to cash or bank, which is decreasing in the business, that's why it is credited. And the last case, when revaluation expenses are liability of a partner and he has paid, in that case no entry will be passed in the books of account, because it's a responsibility of the partner and he has paid his own. There is no relation with the firm. Now, if there is a profit on revaluation, when there is a profit on revaluation, when the situation is that the total of credit side, that is income side of the revaluation account, is exceeding from the total of the debit side. So if there is a profit on revaluation, then definitely revaluation account is showing credit balance. So that trade and that profit on revaluation will be transferred to the old partners capital account in old ratio. So revaluation account will be debited for closing it, and we are transferring to the old partners capital, so old partners capital account will be credited in their old ratio. If there is a loss, it means revaluation account is showing debit balance, So for closing it, we will credit the revaluation account and we will debit the old partner's capital account in their old ratio. So this is the format. These I have explained you just now, and I have giving you for the comprehensive format of the revaluation account. So wherever revaluation account was debited, that will be shown on the debit side. So decrease in asset, increase in liability, unrecorded liability, increase in asset, decrease in liability, unrecorded asset will be credited. Partners capital account for the remuneration and cash expenses paid for the revaluation should be debited here. If there is profit, then it will be shown here. If there is loss, then it will be shown here. Either of the situation will be there, not the both. So I'm taking one question